If anybody can describe the month of May, I would say it was akin to an anxious calm where people can only speculate in terms of what happens next. Ever since April's inflation numbers showed a 0.1% drop and the Federal Reserve raised rates by a quarter point at the beginning of May, as a result, people didn't know what to expect. While those factors are objectively negative, a silver lining was that we were at a level of inflation we haven't seen since April of 2021. Both these statements are conflicting signals, and the real estate market likewise is varied in terms of statistical patterns. The only way people can get a sense of certainty for the near future was to wait for May's inflation data to come in and see what the Federal Reserve would do in its June meeting. In today's report, we will evaluate recent events as we dive into May's market report. Before we start, don't forget to subscribe and follow me on other social media platforms for more real estate content. Now let's begin. First up is the median sales price. May clocked in at $406,000, which is 1% less than April. Year over year, the increase has been marked at 2.8%. This is the third month in a row that the monthly sales price has declined. Will this continue, or will this pattern of decline get derailed? Now we go to inventory in the Las Vegas Valley. May shows up at 10,438 units, a 1% decrease compared to April. May of 2022 displayed a difference of 67.6% for the yearly comparison. This is the first time we see monthly inventory numbers post a decline. What could this indicate? We now cover pending transactions where a seller accepts a buyer offer and the transaction goes into escrow. May sits at 31,876 units being under contract, marking a decrease of 1.4% when compared to April. May of 2022 had a difference of 35.4% year over year. We go from pending to the final stage of an escrow, which is closed transactions. Simply put, these are the number of home transactions that finish escrow and transfer home ownership to the buyer. May clocks in at 32,173 units closing, marking a decrease of 2.3% when compared to April. May of 2022 showed a difference of 36.5% year over year. We now go to our final stat, which is median days on market, or in other words, how long it takes for the listing to go live on the market to an accepted offer. May sits at 21 days on market, which is 2 days more than April. Annual gains show a decline, where it took 8 median days to sell in May of 2022. As the months go on, we see the days on market increase at a considerable, consistent pace. Alright, I'm going to cover the notable developments and give you some trends to look for in the future. Some things are going to sound like a broken record, but some developments will be new. The seller's market is still present, and it seems that in some ways, buyers have gained less leverage than other monthly comparisons. True. Contract activity continues to decline, and the days it takes for a property to go under contract is increasing at a noticeable rate. Not to mention, May makes the third consecutive month where the median sales price has dropped. However, monthly inventory comparisons have posted their first decline since March of 2022. Even though inventory dwarfs May 2022's numbers, inventory is surprisingly still low relative to current buyer demand. This is the first inventory decline in over a year, and that may indicate that inventory peaked last month, but we will have to see how the rest of the year pans out. However, listing strategy still matters. To get the best results, listing at fair market value will give sellers the best chance at getting multiple offers in the shortest amount of time. For buyers, the number of positives have dwindled in size. Of course, the previously mentioned factors of declining contract activity, increasing days on market, and a falling sales price all come together to give buyers more leverage in the potential negotiation. However, affordability continues to be a persistent problem for buyers due to inflation still being at an elevated level. Not to mention, we have yet to see what the Federal Reserve will do in its future meetings, and we will have to wait and see if the pause in rate hikes was just a one-time thing. We also have to factor in that inventory posted a monthly decline, albeit a small one. Interest rates for mortgages may peak soon or start increasing again, which will have a colossal effect on the future of buyer leverage going forward. We will just have to wait and see. Now, as always, keep your eye on the Federal Reserve and inflation reports. When the Federal Reserve saw 4% inflation for the month of May, it decided to enact the first pause in rate hikes. However, They also justified the rate hike pause by saying they wanted to gather more data to inform future decisions. And that puts the spotlight on June's inflation data, and that data will give an approximation of what the Fed will do next. The next inflation report on June's inflation numbers will come out on July 12th, and the next Federal Reserve meeting is going to be on the 25th. Well, that wraps up May's market report. If you have any questions about real estate, please don't hesitate to contact me over the phone, email, or any of my social media platforms. This is Oscar SanJuan with Vegas Strong Real Estate Group, signing off.